Hello guys, welcome to another video. So today we're going to look at EURUSD. I'm just going to show you how to do analysis on these things, without using any indicator. So basically we're just going to run through, different time frames. I'll tell you what to expect from them, and we're not going to be using any indicators. That's not what we do here. So it's very important for you to understand or to be able to read the structure on any chart without having to use any indicators. So let's get started. All right, so as always, like if you're new here or if you've been following the channel rather, you will know that we always start with the highest time frame so that we have a view of the bigger picture before we can drill down to the smaller time frames where we'll be taking our trades. So this is how the EURUSD looks on our monthly chart, and what we can take from this is that recently, or for the past couple of months or so, the price managed to move higher than this. Or if you look at it, it's been moving to the downside and it left some trace here, right? So you can see it was moving to the downside and then it paused and then it continued again. So if you're someone that trades pure price action, I'm sure you're familiar with things like drop, base, drop, where basically we are saying that the price was dropping, then it stops, then it drops again, which is what we had here, where the price was moving, stop, moving. Like move, stop, move, stop, move, stop. So that's base drop, base drop. So but now the price found an area of support or found some ground there, and then it moved up. So I'm not sure whether where it found the ground there was something to the left or not, but that's not the point. The point is it found some ground there and then it moved to the upside, and you can clearly see that it moved, definitely moved higher than this, right? So immediately it moved higher than that. It's been struggling to continue with that upward move. You can see that the price rather gave us this and then it gave us this again, which means that's what we have, where the price is moving in one direction, then all of a sudden we have a candlestick in the opposite direction, and that candlestick sort of swallows the bodies of the previous candlesticks, which is what we call bearish engulfing. Basically, that's what we have here. So you can see the bears have engulfed the price action, but they failed to continue to the downside to at least push the price there. The price stayed there again. A few more months later, we are having the same bearish engulfing, and this time around, because you can see that after this engulfing, the price did manage to move higher than that candlestick slightly. Now we are having the second bearish engulfing. So I'm trying to show you these things so that when we get into the smaller time frames where I'll be making the final decision, at least you know the bigger picture, the signs were there, right? So, and now that we're having the second bearish engulfing, we can see that the price hasn't moved higher than that, which means the bulls are not really pushing harder to say that no, we see you are trying to reverse the price, but we're not going to let you do that. That's why we are breaking above. So meaning we are not done moving to the upside. In this case, they haven't done that, which means the sellers, with what they did here, they still have a chance to push to the downside. So that's what you can take from this one. So let's check what we have on weekly. So this is what we're having on weekly. Remember, on the monthly, we're saying that because of that bearish engulfing, and after having that bearish engulfing, the price never really moved higher than that candlestick that engulfed the bodies of the previous ones, meaning that the sellers actually have a chance. There's a room for the price to push to the downside based on what we saw on monthly. Now, this is what we are having on weekly. Does weekly agree with what we saw on the monthly? That's what you're going to find out now. We're about to find out. So we can see that clearly during the very same time when we're talking about drop-based drop, that drop-based drop on monthly, this is what we are having on weekly. Weekly was strongly to the downside. Weekly was strongly bearish, and we had a bearish trend line somewhere there, and when the price found the ground, it then started gaining and breaking the bearish trend line and breaking these areas of resistance there, which means the bulls took over. That's when even on monthly we saw the price gaining, getting some, finding ground there and then pushing to the upside. Then it became bullish, right? And during the bullish trend, we had, let's just put the actual trend line so that you can follow. So during that bullish trend, this is what we had. We had a bullish trend, and this was the trend line, right? And this being the trend line of that bullish trend, we can clearly see that the trend line has been broken, which is it was broken during that time where on the monthly you had what? You had bearish engulfing. And after that, on monthly, we had said that you never went up and took out the candlestick that did all of that. So we can see that during that time, the monthly is saying there's a room to go to the downside. Weekly is saying yes, we can see that the bears actually have a chance because of what they are. They change the dynamics on this weekly time frame, meaning they moved the price from being bullish and moved to the other side of the trend line. And we can clearly see that all of this was started by this guy here. So this is the area of resistance or the area of supply that actually reversed everything. So the bulls were in control, pushing all the way to the upside. And once the price formed that area of resistance that I just marked, the resistance or the supply, then the price from there, that's when it was like, no, we are not going higher than that. We can see that it started by giving us what? Pin bars, right? They gave us pin bars, and then from there, the pin bars moved to the downside. They even took out the trend line. And all of this was happening at this. When you move to the left, you can see here on the thing, on weekly, there's actually a pause there. I'm not sure if you can, my line was not straight there. The line is supposed to be somewhere here. Yes, so this is where we are having the main supply or the resistance on weekly. We were having this one before, which is where the price touched it, moved to the downside, touched it, moved to the downside. And the second time when it moved to the downside, it actually did what? It actually broke a trend line, which means we can now use this one because of what it just achieved recently. We can now move away from this one here and say we have our weekly resistance here, or our weekly supply, which is the one that pushed the price to the downside and actually broke the trend line. And here is our support or the demand, support or demand, whichever thing you use. So now we can see that the price is basically bouncing in between our demand and our supply. Now, is it gonna break the supply and continue with the uptrend? We don't know. Is it gonna go back to the downside and break the demand? There's a chance, but we don't know. We're not going to predict that. So what you can do now is to say that you will just trade in between the two. Try and get some trades from the supply to the demand, or from the resistance to the support, from the support to the resistance, just like that, until one of them is taken out. Why do we think that this can be removed? It can be removed because when you look at what you saw on the monthly, we saw that there was bearish engulfing, which means there is a chance to move to the downside. But this can also be taken out because what the bears did, they only broke the trend line. They haven't removed the structure or a zone. So they haven't removed a support. If they moved lower than a support, then we can see that they defeated the bulls because they would have taken out their two key structures. But in this case, they've only taken one, which means now let's just focus on trading in between those two, of which they are big enough. And we can see the price now sort of went back to retest the resistance or the supply that pushed down and broke the structure, which is a very significant zone, which means the price has a chance to go back to at least this demand. We're not going to predict anything past that. Now, let's check what we have on daily. So you can see that so far, what we saw on monthly and what we saw on weekly, they are saying there's actually some room to push to the downside. But let's see what we have here. So this is what we're having on daily. So on daily, we can also see that the price went up when it was touching that weekly area of resistance. That's where it went up to, and it does have a room to push to at least here. So even the daily, there's nothing much that we can comment on. We can see that there's room to go to at least this support or the demand on daily. So there's also some room for you to trade towards the downside. So now what have we got on H4? So this is what we have on H4. So far, that what I can tell you is that the price does have a chance of pushing to the upside, but knowing these things, they won't just move like this. So instead of just trying to jump in the middle of nowhere, what you can do is to wait for the price to actually move up towards a stronger zone where you can try and join the bears from there. So with this, this is what we're having on H4. So the H4 was when we're having that weekly bullish trend line, the trend and everything, H4 did have this one here, and the price came back after forming all this what do you call this this bearish pin bars here. I'm trying to highlight this one at the top, all these bearish pin bars there, and the price. Remember, I always tell you that when you are having, let me start with the bullish pin bar. When you're having a bullish pin bar, so if you have watched until this point, guys, and you think you feel like what I'm saying here is something valuable and you haven't subscribed, please do so, so that when I make more videos, they can be suggested to you. So let's continue. So remember, I always mention that when you're having a pin bar, let's start with the bullish pin bar. When you're having a bullish pin bar like this, let's say you are looking for buy trades at a support or a demand, right? And then the price gives you a bullish pin bar. You're like, okay, the bulls are rejecting the price, the bulls are kicking in, which is a good sign, and I can use that to go in because I can see that they are coming in. So what you need to understand is that those bulls, even if they can try and reject the price, but if they don't break the range of that candlestick, the range of that pin bar, then it's pointless, right? So the moment you're saying, okay, I see now they are starting to come in, maybe the safest way would be to wait for them to break that range, then you can go in, because once they break the range, that's where, in most cases, that's where the confirmation comes in that they are ready to take over. Now, if we look at what we're having up there, we can see that we are having bearish pin bars, bearish pin bars. Once you break the range of that, but if you're just giving me a bearish pin bar and then the next candlestick continues like this, then what the best we're trying to do there, it failed because it has been removed. The price moved higher than that. But if you're giving me a bearish pin bar and then you come and break that range, then you have a chance of pushing to the downside. And we can see that once that range was taken out, the price pushed to the downside. It even removed the trend line and it removed the area of support. Now, after the trend changed here on H4, we can see the price did actually go back towards this pause here. Remember the drop, base drop, towards this pause, which is the one that completed the move to the downside, breaking this zone and breaking the trend line. Then it went up there and then retested and then it pushed to the downside. So we can clearly see that on this time frame, we are moving to the downside. You can put your trend line somewhere there, and the price, just went up to retest around there. It's pushing to the downside. I would say to you that as much as we said that we're having some room to push to the downside on the bigger time frames, you do know that these things don't move in a straight line, which is why if you want to play it safe, you'll have to wait for them to actually pull back towards a safer zone before you can join in. So what you can do here is to say that for me to continue selling, maybe let me wait for this structure to be taken out, this break of structure. If the price can break this structure, if the price can create a new low, then you can say that, okay, I see we are pushing to the downside. Any pullback towards maybe an area of supply or a trend line, then you're going to continue like that. Because the goal, remember, based on the highest time frames, these ones, they're saying you do have a room to push towards this, remember, and the daily is saying you do have a space to push towards that. So there's some space to push to the downside, but you cannot just jump in. So rather wait for this one to be taken out if you didn't get a chance to sell around the trend line or this area of supply there. If you didn't get a chance to sell there, I think the safest way would be to wait and then continue like that. So I think that's what you can expect from this one. I don't like moving to the smallest time frames because the dynamics will change. So like when you look at this one, you can see that we were having this taken out, and this is a very strong area of support or area of demand, which is the one that pushed up, breaking this resistance and the trend line. So when the price comes to this demand or the support, it can react from there. But trying to take a buy trade there is very risky unless if you wait for confirmation. That is why I'm saying if you're trading on H4, you need to be careful of this guy. If you don't remove this guy, then you'll always have a chance of bouncing from there. We saw that the structure on the smaller time frame to say that this guy, why did the price turn here? What if it turns again? Whatever that forced the price to turn here, what if it forces it to turn again? Which is why you cannot ignore this area, because around here it seems like there's always a reaction, which is why I'm saying if you want to play it safe, rather wait for it to be removed, then continue selling like that. So that's what you can expect from this one. there is more space to push to the downside. The only way you can push to the upside or look for a buy trade is if you like taking some risk, and then you just keep your eyes around there, and then you get your confirmation. Then you can push to the upside, but not beyond this point and beyond the trend line. That's what you can do. All right, I'm going to end this one here. I hope you enjoyed, guys. So try and follow it. And I hope the stuff that I'm teaching you here, you can try and apply them on your trading and, make some bucks. And if you want the lessons, you are more than welcome to text me, and then we can take it from there. All right, guys, I'll see you in the next video. Thank you.